Hello, investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. This is a one-year daily candle chart of the Russell 2000 index, ticker symbol RUT. And I'm starting off with this one because obviously it's a more broad-based index than what we see in the Dow or the S&P 500. And as I do each and every week, I left my lines on the chart so you can see how the forecasts worked out for us. Now, again, this diagonal line right here was what I drew last Friday after the close, and I said that we would most likely move lower in a test of support right there, which is that horizontal line. And as you can see, the Russell 2000 hit my target on Tuesday. It hit the target again on Wednesday. Thursday we rallied a little bit, and lo and behold, today the Russell 2000 is breaking down below that support level. Now, there's a lot going on here this week. The GDP number was released this morning at 4.10%. That's a great number, but guess what? It missed the estimate, which was still a pretty high estimate of 4.2%. So that being considered along with some of the stocks that we're looking at with regard to Facebook, Twitter, we have a lot of other stocks putting pressure on the market right now. And so the Russell 2000, again, being a more broad-based index, could very well lead us to lower prices next week. So as I draw my lines for next week, I'm suggesting that we're going to go right back down to this support level, and then we'll have to see whether or not that support level holds. So my forecast, again, diagonal line down with the end of the line being my target, and that is going to be the forecast for the Russell 2000. Now, if we look at the NASDAQ market, which is represented in the Qs right here, you'll see that early in the week it looked as though we weren't going to hit the target. And then today, look at that low. Isn't that amazing? It hit right at my low target price, again, being the end of that diagonal line. And we're seeing a little bit of a bounce in the NASDAQ market. So we could very well see a little bit of a recovery early on in the week, and that's why I'm drawing this line. But later in the week, I think we're going to follow suit and right along with the Russell 2000 to lower prices. So we're going to have to see how that works out. Keep your eyes on the market and keep this chart. If you could, make a screenshot of this so you can see exactly how it pans out during the course of the week. Now, if we look at the volatility index, I'm going to hop to this because the volatility index is inversely related to S&P. I said that we would most likely rally up to test resistance. And again, early in the week, we went lower, bounced off a support, and today's high came within 2 pennies of that target right there. So again, what does that mean for the VIX? Well, if you look here, that long shadow above the candle could suggest that we'll go down a little bit early in the week. But this is all very much a bullish engulfing pattern, which could lead to higher prices on the VIX. So I think that we could very well break out over that resistance, which again, in turn, brings us to a down market in the S&P, because if we're bullish on the VIX, then we are bearish on the S&P because they're inversely related. Okay, let's go right to the next one, which is going to be the spiders. And look at this. The VIX rallied towards the end of the week, and the S&P sold off later in the week with a bearish engulfing pattern. So while this did not hit the target, I'm going to erase this line right here and make a forecast that we are going to break down below this role reversal support. I think that the S&P is going to go lower and possibly go all the way down to fill this gap level support. So keep an eye on the S&P. The diamonds was very similar to what happened with the S&P. We rallied above resistance, and again, if you look real closely, we see pretty much a bearish engulfing pattern. We're not quite there by definition, but good enough to tell us that the sellers are moving in because we have that red candle on higher volume. So I'm going to erase all my lines on the diamond chart so we could have a clean slate going into next week. See this little tiny gap right here? All right, it doesn't look like much, but gaps fill about 80% of the time. So I'm forecasting that the diamonds is going to go down to fill that gap support and possibly bounce off of that before we can tell whether or not it's going to continue lower. Now, if you want to learn more about what we do here at The Market Guys, just go to themarketguys.com. Click on the video tab right there, and that will bring you to an educational video library that's filled with short videos that we call market shots. Just click on that video right there. It'll bring you to the page that I'm referring. And right there you can see that there's a nice selection of videos right there that you can learn from, particularly trading the gap. Look at that one. Look at the role reversal right here, and you're going to get some valuable information that will help you not only forecast your stocks, but it will also help with managing risk in your positions. So that's it for now. Thanks for joining us, and have a good weekend. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.